Hey everybody, my name is Aman and welcome. I'm an investment coach at Sage Investors, and welcome to another edition of Stock Talk, where we talk all things about the stock market. Well, today, not another pretty crappy day in the markets. Another 3% drop. Pick an index. It's going down. And so the big reason, well, I'm thumbing through the news this morning in terms of what are the catalysts for today's latest drop. A lot of it's coming down to the continued pressure that oil prices are facing, down another 5% today. And I'm scratching my head, kind of wondering, is that really the reason why stock prices are down? So I'm trying to kind of mind map my thought process with respect to trying to rationalize why this stocks are pulling back severely today. And so when you look at the argument that it's oil prices that are driving today's downfall, I have a hard time believing that, because at the end of the day, lower oil prices are good for stock prices, for the economy, because oil is an input into a lot of things we produce, into a lot of the goods and services that we produce. If you're flying, if you're an airline, your input costs have dropped dramatically, so that's good for your bottom line. If you're transporting goods around the globe, your oil and transportation costs are low, so that's a good thing. So ultimately, falling oil prices shouldn't have a negative impact on stocks, because it's allowed, essentially, if you look at things from a long run perspective, it's actually good for the profitability of companies, and at the end of the day, these will be ultimately recognized in stock prices. So I have a hard time buying the argument that oil prices is the catalyst. Let's go down the list here. How about interest rates? Well, our interest rates, with the Fed increasing rates in December, is that kind of the catalyst now that's driving stocks down? Well, I don't think it's that either right now, because the reality is the Fed has indicated that they increase interest rates, and they will continue to increase interest rates if they see meaningful improvements in the economy and in the global economy to a certain extent. And so far, the growth level has not been great. It's been tepid. It's been mediocre. It's been blah. And so I have a hard time seeing the Fed kind of aggressively increase interest rates within that kind of that climate. So I don't think right now interest rates are a reason why stocks are going. So the other argument you hear about is, well, everything going on in China. The China market has also been falling precipitously. Their economy has been, quote unquote, slowing down. If you count 7-8% growth to be a slowdown, I think a lot of countries would take that. Granted, I get it that a lot of their numbers that are coming out of there are quite dubious, but in a way, is China the reason why stock prices are falling? Well, China, in a way, is kind of the canary in the coal mine, because most of their business is, their economy is export driven. So they're exporting a lot of final goods and services around the world. And so in order to do that, to have a high level of exports, you've got to have some demand for it. So in a way, that could be kind of a sort of a trigger for kind of a pullback in stock prices. Ultimately, I think what's happening here right now at this moment is, I think there's a slow realization that stock prices have been and currently are relatively overpriced for a variety of reasons, which we've talked about. Interest rates, uber low interest rates have been a great catalyst, but the reality is, despite lower interest rates, as I said earlier, the economies around the world have been essentially flat. They've been average, they've been mediocre. It's been like 1 to 2% modest growth. The demand really hasn't been there. And I think slowly investors are starting to wake up to the fact that, you know what, some of these companies that are owning, which may be great companies, but they're just not worth the prices that they're selling for right now. And so maybe people are taking money off the table. That's kind of seems like how I see things evolving right now. So this argument that I'm hearing a lot today about oil prices is the reason why stocks are down like 400 points, on the Dow Jones and on the TSX. I think it's an easy way out, and I think that the issues of what's happening are much more bigger, and I think it revolves around the fundamental fact that if there's no demand for goods and services, or very little demand for goods and services, people aren't going to buy products and services, and that ultimately reflects in bottom lines of companies, and ultimately stock prices are valued on fundamentals of a business, of basically revenues and expenses and their ability to manage capital. And it's just not reflected there right now. And so stock prices are pulling back. And guess what? I don't think that's a bad thing. I've been basically pounding the table saying we need an adjustment. We need a serious adjustment, rebalancing back to some equilibrium. We need to get the concept of risk back on the table, because right now people are putting money into really high risky ventures because there's no other alternatives, because interest rates have been so crazy uber low. So that's kind of my take really for today. Just seeing all the carnage that's going on around that right now in the market, and the bottom line is really is to look at things at a bigger picture instead of the micro. That's all I got for you today. If you have any questions, feel free to give me a shout through my website, www.sageinvestors.ca, or you can follow my momentary tweets on Twitter. My handle is @sageinvestors. And if you have any questions, DM me, and I'll be more happy to address them here on Stock Talk. So that's all I got for you today. My name is Aman, investment coach at Sage Investors. This has been another edition of Stock Talk, and we'll catch you again soon. All right.